The rush to buy real estate in China bears striking similarities to the 2008 US housing market crash, where everyone wanted to buy property because prices were steadily rising. The demand to purchase homes became so intense that developers sold entire complexes before construction even began. Yet, even after construction was completed, many apartments remained empty. Owners bought the properties, but no one lived in them. The primary reason for this demand was that people were not just purchasing homes for living. They were buying second or third properties to profit from the real estate boom. The supply of homes grew rapidly to meet this demand, but many of these properties sat vacant, bought purely with the hope of price appreciation. With other investment sectors less accessible and real estate being the only viable option, people poured their wealth into it. In fact, research shows that around 70% of Chinese families' wealth was tied up in real estate. This lack of diversification created a massive risk. If the real estate market collapsed, so would the wealth of millions of families. And, as we know, the collapse eventually came. One of the biggest developers in China, Evergrande, serves as a prime example of how the real estate bubble grew. At its peak in 2018, Evergrande was the largest real estate company in Asia. However, behind the company's rapid expansion were problematic and unsustainable practices. Evergrande, like many other developers, would lease land from local governments and sell homes before construction even started. They collected full payments up front, but instead of using the money to begin building, they would use it as a down payment to buy more land for future projects. This practice, while lucrative for the company, was incredibly risky and unsustainable. The local governments also played a key role in fueling this crisis. Local officials were benefiting from the land leasing arrangements, which made them hesitant to regulate the real estate sector properly. About 50% of local government revenue in China came from leasing land to developers like Evergrande, giving them a direct financial incentive to allow risky development practices to continue unchecked. As the crisis deepened, Evergrande's debt burden grew out of control. In 2021, the company defaulted on its loans, causing panic in the financial markets. As news of Evergrande's financial trouble spread, it became clear that the problem wasn't just limited to one company. It was a systemic issue within the entire real estate sector. Developers in China owed around $5.3 trillion in debt, and many were unable to pay back loans or finish projects. The Chinese government tried to intervene by implementing the 3 red lines policy to limit the amount of debt property developers could take on, but it was too late. The damage was already done, and many projects stalled, leaving unfinished homes across the country. In some cases, buildings that were sold years ago are still not completed, with new funds being used to pay off old debts instead of finishing construction. As these issues became more apparent, protests began to emerge. In July 2022, homeowners from one development in central China sent a letter declaring they would stop paying their mortgages unless construction on their homes resumed. This sparked a nationwide movement. By July 12, over 100 projects had joined the mortgage boycott, and as of today, more than 300 projects across China are refusing to pay mortgages until construction is completed. Tens of thousands of homeowners are actively defaulting on their loans, hoping their actions will force the government to address the crisis. This is more than just a banking or real estate crisis, it's a political crisis. The CCP is facing the same kind of unrest and dissatisfaction it tried to suppress during the 1989 democracy protests. As more citizens refuse to pay mortgages, and as the scale of the real estate collapse grows, the CCP is facing its greatest challenge in decades. If the government cannot find a solution, this could lead to widespread economic instability that threatens the future of China and the CCP itself. The protests in China over construction delays have escalated, with over 300 projects now involved, representing more than $100 billion in debt held by the country's major banks. The situation has worsened due to defaults by major developers, which further threatens the stability of China's banking system. What makes this even more concerning for both banks and the government is not just the size of the potential defaults, but also the growing number of people joining the mortgage boycott. The Chinese Communist Party, CCP, has already ordered banks and media outlets to suppress news about the mortgage boycotts, desperate to prevent the crisis from spreading. These boycotts pose a significant threat to Chinese banks, a crisis that some experts argue could be 100 times worse than the 2008 banking crisis in the US. One key difference between the two situations is that the majority of the loans in China are secured by houses that have not yet been built. Unlike the US housing crisis, where banks could repossess homes when borrowers defaulted, Chinese banks cannot simply take possession of unfinished homes. As a result, banks are absorbing the losses, and if defaults continue to rise, the financial system could be pushed to the brink, potentially causing major banks to collapse. The Chinese banking system works on a fractional reserve basis, meaning banks only need to keep a fraction of their deposits in reserve and can lend out the rest. This system has facilitated economic growth over the past century, but it relies on depositors trusting that their money is safe. If banks make too many bad loans and defaults rise, this trust erodes, leading to potential bank runs. In response to this risk, some of China's largest state-owned banks have already placed restrictions on withdrawals, signaling a loss of confidence. The real estate sector is crucial to China's economy, representing about 30% of the country's GDP. Additionally, 7 out of China's top 10 companies are in the financial sector. This interdependence between banking and real estate means that the mortgage boycotts are not just a real estate issue, they threaten the entire financial system. To mitigate the damage, the CCP has been considering injecting over $1 trillion into real estate developers to help them complete construction projects. This marks a shift in the CCP's stance, as it previously opposed bailouts, fearing they would encourage risky business practices. However, now that the crisis has the potential to undermine the government itself, the CCP is reconsidering its position. In addition to the financial implications, the CCP views the mortgage boycotts as a political crisis. The government is fearful of the unrest spreading and has ramped up censorship to prevent the situation from escalating. In fact, the CCP's actions against free speech have already affected content creators like me. My videos on this subject have been heavily disliked by bots, and YouTube has even demonetized some of my videos covering these protests. As a result, I've had to adjust my approach to avoid having my channel deleted. Many clips will be blurred, but for those who want to see uncensored content, membership offers a way to access the full videos without risking the channel. I want to make it clear that I'm not trying to profit from my audience, but due to the restrictions, this is the only way to recoup lost revenue. As of now, there is still limited information about the CCP's plans, but the situation is developing rapidly. I'll continue to monitor the crisis and release updates as soon as possible. If you haven't already, be sure to check out my previous video on the corruption that led to billions of dollars being stolen from Chinese citizens. It's definitely worth watching. Mortgage boycott and bank risk. The mortgage boycott, which is spread across numerous projects in China, is causing alarm because it represents a systemic risk to China's banking system. The scale of the boycotts, totaling over $100 billion in debt, is enough to severely destabilize financial institutions. Unlike the US housing market crash, Chinese banks cannot repossess unfinished homes, making it impossible for them to recover their investments. This exposes them to a higher level of risk. Impact on the banking system. The text highlights the fractional reserve banking system, where banks lend out most of the deposits they receive. If a large number of loans become non-performing, banks risk losing depositor trust, potentially triggering bank runs. The government's decision to impose withdrawal limits in response to growing unease signals that trust in the financial system is starting to erode. If this continues, China may face a banking collapse similar to what occurred in the US during the 2008 financial crisis. Real estate dependency. China's economy is heavily reliant on the real estate sector, which accounts for a significant portion of GDP. With so many major developers and financial institutions involved, the boycotts are not just a real estate issue, they pose a threat to the entire economic structure. The text draws attention to the CCP's shifting stance on bailouts, as the government now faces the prospect of having to intervene with massive amounts of capital to save developers and prevent further collapse. Political implications. The text also emphasizes the political dimensions of the crisis. The CCP's handling of the situation is more than just economic, it is a matter of political stability. The party views the mortgage boycotts not only as an economic problem but also as a threat to its legitimacy. This explains the government's heavy censorship efforts and suppression of news related to the boycotts. The party is worried about the potential for widespread unrest and protests, as people's savings and investments are tied up in these unfinished projects. Media and content creation. The text gives insight into how the situation is affecting independent media and content creators. The author, facing censorship, notes that platforms like YouTube are demonetizing videos that discuss these protests, making it harder for creators to raise awareness without facing financial penalties. This highlights the broader issue of free speech and information control in China, where the government actively suppresses narratives that could harm its image. The crisis described in the text highlights several critical challenges facing the Chinese economy and government. The real estate sector, which has been the engine of China's growth, is now showing signs of deep structural flaws. The high leverage of developers, the over-reliance on pre-sold homes, and the lack of adequate regulatory oversight have created a bubble that is now bursting, with widespread consequences. The CCP's response, suppressing information, censoring the media, and considering bailouts, reveals the political sensitivity of the issue. While they have intervened in the past to support struggling sectors, the scale of this crisis may require unprecedented action. The political consequences could be severe, especially if the protests spread further and begin to undermine public trust in the party. In the long term, China will likely need to reassess its economic model, especially its reliance on the real estate sector. Moving towards a more diversified economy with a focus on technology, manufacturing, and services could help mitigate the risks posed by the volatility of the real estate market. However, that transition may be difficult and could take years to achieve. Lastly, the situation also underscores the global interconnectedness of financial markets. China's economic troubles, especially in such a significant sector, could have ripple effects across the global economy, affecting everything from commodity prices to international trade and investment flows. China's economy is facing a disaster of unprecedented proportions. As the country's mortgage crisis spirals out of control, banks are failing at an alarming rate, and protests erupt across the nation. For weeks now. Watch the video until the end. Share your comments with us about the subject, and do not forget to subscribe to the channel and like the video. Millions of citizens have found themselves unable to access their savings, with hundreds of billions of dollars tied up in a collapsing banking system. The once unstoppable Chinese economy now finds itself on the brink of a full-scale financial collapse, and it's raising serious questions about the global economy's stability. Over the last few days, more than 40 banks have reportedly vanished, with no warning or explanation. In their wake, millions of depositors are left stranded, their life savings frozen, and their futures uncertain. These financial institutions, once deemed too big to fail, have become a symbol of China's deepening crisis, and the impact is only beginning to be fully understood. The Chinese government is scrambling to stem the damage, with emergency bailout funds being announced to stabilize the situation. However, critics argue that these measures may not be enough to prevent an even larger crash. As the government steps in to rescue failing banks and construction companies, the situation remains volatile, and confidence in the country's financial system is rapidly eroding. Watch the video until the end, share your comments with us about the subject, and do not forget to subscribe to the channel and like the video. But the financial chaos isn't confined to the banks alone. Across major cities in China, protests have broken out in response to both the mortgage crisis and the widespread economic instability. Citizens, frustrated with the lack of government action, are taking to the streets, demanding answers and accountability from those in power. As these protests grow, so does the tension between the Chinese people and the Communist Party, with many questioning the government's ability to handle the crisis. How did we get here? What caused this mortgage crisis in the first place? And more importantly, what does this mean for the global economy? The answers are complex, but one thing is clear: China's financial crisis has only just begun. In this video, we will dive deep into the causes behind this unfolding disaster, explore how it's impacting the Chinese people, and analyze the potential consequences for the world economy. Stay tuned as we unravel the truth behind China's financial crisis and its ripple effect across the globe. Watch the video until the end, share your comments with us about the subject, and do not forget to subscribe to the channel and like the video. In 1989, the Chinese Communist Party, CCP, took a drastic action that stunned the entire world. Faced with growing democracy protests that threatened the CCP's rule, the government was so frightened that it launched a violent crackdown on its own citizens to silence the movement. Thousands of innocent Chinese students were killed, and many more were injured. In recent weeks, a situation has emerged in China that has similarly shaken the CCP to its core. Chinese citizens across the nation have taken to social media to organize a movement that has never been seen before. Thousands of homeowners are refusing to pay their mortgages in protest against unfair treatment by banks and the government. This bold move has sparked protests in cities across China, and the movement is gaining strength with each passing day. The CCP is so concerned about this uprising that it has deployed tanks to maintain stability. For the first time in over 3 decades, the CCP is genuinely afraid for its survival, and it all ties back to China's real estate crisis. According to one expert, the CCP views this as a political protest rather than a banking crisis. Government officials are deeply anxious about how this situation could unfold. In fact, one country might already be facing a recession: China. Protests have erupted over frozen bank deposits, with hundreds gathering in Zhengzhou. Tens of thousands of people are withholding mortgage payments, demanding compensation, and their efforts are showing no signs of slowing down. As the protests spread, Chinese authorities are intensifying their efforts to suppress them, even using violence against demonstrators. Security forces have been accused of brutal actions, indiscriminately attacking men, women, the elderly, and children, without regard for who they are. The situation is becoming increasingly dire as major Chinese banks are at risk, with more than $9 trillion in loans potentially defaulting. If this crisis worsens, it could lead to the collapse of China's economy and the downfall of the CCP itself. But this mortgage crisis is just one of the many challenges the CCP is facing. The government's zero-COVID policies and banking scandals, like the one in Hunan, have already placed immense strain on China's fragile economy. However, the real estate and mortgage crisis stands out as the biggest threat, impacting trillions of dollars and involving critical sectors like banking and real estate, all while affecting millions of households. Some experts have warned that this mortgage crisis could be far worse than the 2008 global financial crisis. To keep these developments under wraps, the CCP's censors are working tirelessly to block articles and videos that reveal the truth. I've noticed that my videos covering China are often bombarded with dislikes, likely by CCP bots attempting to suppress this content in the algorithm. So if you could take a moment to like this video, it would really help me out in reaching more people with important information, especially when it concerns topics critical of the CCP. Although the protests started in July, the problems plaguing China's real estate market have been building for decades. To understand how the Chinese economy reached this point, we first need to look at the cultural and economic importance of real estate in China. In America, owning a home is often seen as part of the American dream. But in China, home ownership has only become more important over the past few decades. Real estate ownership has a significant cultural meaning in China. Families view it as a way to secure their retirement, and owning property is often seen as a marker of social status and success. Because of this, there has been an overwhelming demand for real estate in China, and prices have been continually rising. This has led to a situation where many Chinese people see owning property as not just an investment, but a key element of their social and economic future. Given this cultural importance, it's no surprise that real estate prices have skyrocketed, creating an environment where virtually everyone wants to buy property, regardless of the price. This rising demand and spiraling costs are the foundation of the crisis we are seeing today.